Good afternoon, everyone, and thank you for joining us for today's webinar, PPP Loan Forgiveness Clarification, as provided by the SBA. It was awesome of them to provide us clarification here 5 months after the initial rollout of this thing, and right as everybody was just getting their applications ready. But anyway, I'm Mark Heath. I'm a partner here at McKonly Asbury and Director of Tax Services. With me, as always, is the one and only David Blain, partner and Director of Entrepreneurial Services. I really wish everyone could see Dave today. He is rocking the, I'm not going to use the term Corona beard because that's old. It's now hockey playoff beard. He's rocking the hockey playoff beard. Right. And he is wearing the brightest Flyers shirt I have ever seen in my life. And I am very proud of him for it. So Melissa's going to yell at me because I'm not following the intro script. So before we go any further with this, I would like to mention if you have any questions for us during the webinar, please submit them through the built-in questions function in the webinar control panel, and we will do our best to answer them during or after the webinar. There will also be 3 polling questions today so that you, if you would like CPE, you should be sure to answer those in order to get your CPE. There will be 3. And at this point, I'm counting on Dave to move the slides.
That's right. Let's see if I can get it right here. Oh, there we go. There we go. Look at that picture now. Unfortunately, that doesn't have my orange shirt, but that's okay. Let's go Flyers for all the Flyers fans on this webinar.
That's right.
All right. Let's move along here.
And as always, we're talking to you from McKonly and Asbury. We're a full service accounting firm with offices in Camp Hill, Lancaster, and Bloomsburg. We focus on advisory and business consulting, audit and assurance, entrepreneurial support, and client accounting, internal audit, placement services, and tax services to many industries, including affordable housing, construction, employee benefit plans, family-owned businesses, healthcare, manufacturing, distribution, and nonprofits.
All right. Moving right along here. So, Mark, like you said earlier, it's great that the SBA came out with clarification here with their own FAQ. I almost felt like, Mark, when I read the FAQ initially, that we could have probably wrote it.
I would agree. There are a couple surprises they threw at us in there, which are ridiculously inconsistent with all the guidance we've received so far. But it is what it is, so we're going to have to run with it, and we're going to be covering everything today. I was a little bit surprised that they did come out with another one, but here we are.
Yeah, I kind of agree with you, Mark. I mean, everything that we're going to talk about today for everybody is pretty consistent with what we've already discussed in previous webinars and in previous guidance that we've given everybody. There's a couple of nuances, but pretty much everything's pretty close to what we talked about before. But we thought it was important that we revisit some of these matters because they are outlined in a specific FAQ by the SBA. So it's probably, now that we're in this time period of completing applications, getting applications to the bank, the SBA has opened up their little portal on August 10th to accept applications from the banks. It's probably that time that we maybe revisit this and go through this FAQ and make sure that we've addressed any questions that anybody has as you're completing the application process. So as you can see from the outline here, Mark, that we're going to talk about, basically this outline goes right through the FAQ that was issued on August 4th that was revised as of August 11th. With some additional things on EIDL, but we're going to talk about whatever the general questions were in that FAQ: payroll costs, non-payroll costs, loan forgiveness, and we put the link on there. If anybody wants to go to the Treasury Department site for the FAQ, the link's there. You can feel free to link into that link there and then follow along with what we're going to talk about. Because as I said, it's going to be directly from the FAQ in that order. So the FAQ, when they issued the FAQ, was broken out into those 4 areas that we talked about. The first thing they started was just some general questions for clarification purposes. And the first couple items really focused around what application to use, whether I should use the 3508 EZ form or use the long form, which is the 3508. So basically what they said in the very first question was, if you're a sole proprietor, you should use the EZ form, because as a sole proprietor, basically you went and you went and received a loan. The loan was based upon whatever your compensation was off of your, if it could be off of your Schedule C at the formula of 2.5 times divided by 12. So that calculation, and it was capped at $20,833. So because of that, they want you to just use the EZ form. It's the easiest way to get that, to get the application done, to get the loan forgiveness the way you want to accomplish that. Mark, anything on that you want to add, or is that pretty?
No, I mean that's so the big piece here, the big question is, who can use the EZ form, and if you go through the checklist, we talked about this in previous webinars, but if you go through the checklists and the instructions, if you meet both the salary and hourly wage test and the FTE reduction test for the entire covered period, or you're using or you didn't meet the FTE test and you're using one of the exceptions, you can use the 3508 EZ. So by default then, the only people who can't use the EZ form are applicants who either they reduced salaries and wages by 25% or more, or you had an FTE test that you didn't meet and you don't fall under one of the exceptions. So I'd love to hear from somebody if they think there's a reason they can't use the EZ form, because there certainly could be something we're not thinking of.
Yeah, Mark, you're 100% right. Because if you look at if you just look at this checklist in regards to what you have to do to file the 3508 EZ form, it makes it pretty clear that, if you can meet one of these exceptions on the EZ form, whether it is you're self-employed, or you did not reduce annual salaries, and you did not reduce headcount, and that you did not have and then you were unable to operate because of COVID, you can actually use the EZ form. I think a lot of companies are going to probably be in this world of using the EZ form. A lot of the smaller ones, the larger ones might have FTE issues that they got to get around, or salary issues got to get around. But a lot of the smaller organizations probably are going to be able to use the EZ form.
Yeah, I agree. And let's. So Dave and I were talking earlier about applying early, because that's one question that's not specifically addressed in the loan forgiveness FAQs. It's not addressed in our outline here, but we thought we should address it right off the bat, because that's one consistent question we're getting. If obviously the 8-week covered period in almost every case is already over. I think it has to be. I haven't done the math, but I think it has to be over because you had to be in before June 5th. But so 8-week period is almost over, if not over already, for everybody. But if you're going to the 24-week period, can you apply early, or do you have to wait until the end of your 24-week period? That's the question we're getting a lot. If you go through the form, just the logistics of how it works is, if you're saying your FTE count did not drop, or your salaries and wages did not drop at all, the only way you can check that box is if you wait until the end of the covered period. If they did drop, or you're using one of the exceptions, you check one of those boxes, and you can apply early. There's no reason not to. So let's just take a quick second and walk through the exceptions that we have for FTE reduction. So if you can't meet the FTE test, then your FTE count was down because either A, you couldn't find a qualified person to hire, which was an issue before the pandemic. If you found somebody you wanted to hire, you made them an offer, but they didn't take the offer. If you fired someone, but then offered them a job back at the same pay and they didn't take it, or if someone left voluntarily or reduced their hours voluntarily for whatever reason, if they had to take care of kids at home, whatever, that's an exception. Or if the market conditions were just bad, your business was down and you didn't have work for people to do because of the pandemic, that's an exception. So I feel like the only way that you do not meet the FTE test is if you just could have hired people and you just chose not to for whatever reason. Am I crazy, Dave?
No, that's what we talked about this morning when you and I were just talking about this webinar today, it was just when you and I went through that scenario, it just was like, I don't know how you don't get loan forgiveness if you can meet one of those requirements, and you can. It's just the way the form works, the logistics of the form and the mechanics just lead you down that path that you can get that loan forgiveness.
Yeah, and if you reduce salaries by or hourly wages by more than 25%, you might have a problem. That's one where you might have a problem, and may not be able to apply early, because in that case, if you do apply early and you admit we reduced salaries and wages by more than 25%, we did not restore them, you're going to get hit because it's going to extrapolate it out for the entire 24-week period. So you're going to have some reduction there.
Right.
The good news is you can, there's a box that you can check on the, that says you restored them. Well, that's for the FTE, that if you restored them the earlier December 21 and the date the application is submitted, the earlier of those two. But presumably with the wage test, as long as you restore it before you apply for forgiveness, you should be fine. Absolutely.
Absolutely. And I think the other thing too to keep in mind is, I mean, we have a lot of, we've had a lot of organizations come back to us with they're going through the application process. The way that the last interim final rule was written is it stated that you can apply for loan forgiveness before the end of your covered period. And that's great. But you again, highly suggest work through the mechanics of the application, because in some aspects, filing, just because you spent all your money, Mark, and filing at 12 weeks versus just waiting to 24 weeks, if you don't have the FTEs restored, or maybe you had some type of salary reduction in there of some sort, you might have a situation where you actually have a loan balance to pay back, versus if you extend it out and just go over the full covered period of 24 weeks, the way the application works is it says you can pick up all the payroll costs for that 24-week period, and then you apply it, you divide it by the 0.6 factor. It's going to give you a really high number that will make your loan balance lower, which means that you should be, and you're going to pay on the lowest balance.
Yeah, that's exactly right. That's one exercise we did go through with somebody who had some reduction that they couldn't fix for whatever reason. But yeah, if you get your total payroll cost high enough, even if you have a reduction of that, it's still going to be higher than your loan amount. You can still get full forgiveness. So, and somebody just asked the question, if you fired someone for cause, isn't that an exemption? It is. That's one specific one that I did not say. But yeah, if you have cause and you fire them for that cause, then yeah, you're good. Just make sure you document it.
So let's move on here. We talked a little bit about these first couple of general questions. Let's talk about some of the other items here that were quick clarification points. Electronic documents, scans are okay to provide to the bank. E-signatures and e-consents are okay. A lot of banks are going to that anyways, where they're using portals for you to upload your information, and you give an e-consent through the portal. That is acceptable forms of communication for the certification process and for signing off the loan docs. And in the loan payment, none is due as long as the application was filed timely and you receive full loan forgiveness. So, in other words, if you apply for loan forgiveness, you get full loan forgiveness, or so there is no payment due between the time that you were actually funded to the time you got loan forgiveness. Nothing's due, no interest accrues. It only is due, and interest only accrues on the amount that you actually owe at the end of the day that you didn't get forgiveness for, and you don't have to start making payments until after that determination is made. So just to make sure we got that for clarification purposes on the general questions. All right, so let's get to the first polling question. Being that I'm a big Flyers fan, the question is, who's the Philadelphia Flyers all-time leading goal scorer? There's your selections: Eric Lindros, Big 88, back in the 90s. You got Ron Hextall, Bill Barber, two-time Stanley Cup champion, and it very well could be me. Very well could be.
Yeah, Dave, you were a relative unknown before you came to McKonly and Asbury. So
yeah,
I mean,
exactly.
Who knows what you were doing?
Exactly.
So make sure if you're not paying attention right now, make sure you're paying attention. We got our first poll question. It's only going to be up here for a minute. So first playoff game tonight.
Yes, 8 o'clock.
Yeah. Where's Eric Lindros been?
He's he's a Hockey Hall of Fame now, I think. He's retired. He's retired. And his numbers.
You hear about these other guys. Obviously Hextall's still active in the league. He's actually still helping the Flyers out, indirectly, but
yeah.
All right, couple more seconds.
5, 4, 3, 2, 1. All right. So it looks like our polling answers: Eric Lindros gets 50%, Ron Hextall 17, Bill Barber 24, and Dave Blain got 10. I love it. Nice. I got 10.
Nice. Well done.
So Eric Lindros, good try. Good try on that one. But the actual answer to that question is Bill Barber. Bill Barber is the all-time leading scorer for the Philadelphia Flyers, number 7, 2 Stanley Cups, now 74 and 75 mark. But yeah.
I threw Lindros in there to throw people off. So
that's right.
Glad it worked.
All right. Well, let's go on here. Let's move right on here to the next. We're going to talk about payroll costs next now, all right? And we're going to talk about some items that we've covered before in past webinars, but we just want to make sure they are on the FAQ, and we want to make sure everybody has full clarification on these. So the first one is what qualifies as paid and incurred. So the way it's defined in the interim final rules, as well as in this last FAQ that came out, is that incurred period to and paid during. So what that means is anything that happened inside your covered period is clearly forgivable cost that you can apply to. But if you have incurred cost that you are going to pay outside of the period, let's say it's at the end of your covered period, and you had incurred costs that you were not going to actually pay until the next payroll, which is outside of your covered period, that incurred cost actually can be picked up as forgivable cost, even though you might not pay until outside the covered period. Just make sure that you got the proper documentation on that. Most of the payroll companies out there, whether it's ADP or Paytime or Paychecks, have very good reporting systems for this type of paid and incurred cost reporting. I would just make sure if you're using a payroll provider that they can provide you with the details that you need from their reports. But basically what we're saying is paid and incurred confirmation is that it's paid in the period. So going back to the start, Mark, you could have had payroll costs that were incurred outside the payroll period, but you paid it in the payroll period because your loan was at the very start. That gets picked up as well. So SBA, Treasury have been very lenient in regards to the ability for you to utilize the cash for payroll costs on a paid and incurred basis.
Yeah, point being, if you're using an 8-week covered period, you should be getting payroll covered for more than 8 weeks. If you're going to use the 24-week covered period, you should be getting payroll for more than just those 24 weeks.
It goes back to the classic comment you made in one of our previous webinars, Mark, where you said you call it the double dip. It's sort of like that. Yeah,
it is. Like that. We're double dipping the chip.
It's like going to 3Bs for ice cream and getting 2 scoops.
Yeah, double rainbow all the way.
So let's talk about these partial pay periods. You may need to prorate calculations if using incurred during and paid immediately after, and shouldn't be necessary if using alternative cover periods. So what we mean by that is if you are a every 2-week payroll period, or you pay weekly, you shouldn't have any issues with the paid and incurred concept. However, if you pay semi-monthly or monthly in that type of realm, you can't use the alternate cover period. You have to use the regular covered period, which means that going back to paid and incurred, you're going to have to look at, based upon when you're paying, you're going to have to look at when those services occurred and pull those services that were incurred into your period. So in other words, Mark, let's say you use the 8-week covered period and your payroll's June 30th because you're monthly, but your covered period ran from April 20th to, I guess that would be June 15th. So you would be able to pick up this first 15 days of June, even though you don't pay it till June 30th. You just got to make sure that you do the allocation. You make sure from a partial pay period perspective that you're picking up the correct partial pay periods. Again, that's only going to be an issue if for those that are outside of the alternative covered period, if you're using the regular covered period.
Yeah, and people have asked, is it just as simple as using a number of days? Yes, we see no reason why you can't do that. That should be fine. So if you have 2 weeks of payroll, but only 1 week was incurred inside the covered period, then you go 50-50.
Exactly. All right, moving on here. They also confirmed in the FAQ, which was outlined at the very start of the CARES Act, that it's gross compensation. So you're picking up the gross comp that you pay your employees. That's what gets picked up as forgivable payroll costs. All forms of cash compensation is confirmed. So that could be that if you're trying to replace if it's bonuses, if it's tips, if it's anything that's just cash compensation related, hazard pay of some sort, that cash compensation, if paid in the covered period or alternative covered period, is picked up and is a forgivable payroll cost. Group healthcare benefits. This is going to get a little bit trickier here when we talk a little bit about the different C corporation, S corporation owners and stuff like that. But basically, for group healthcare benefits, the employer portion only. Again, it's not anything that's contributed by the employee, only what's paid by the employer. It's paid during the covered period or incurred during the covered period and paid immediately within that period. So one of the things that we keep getting, Mark, is people wanting to accelerate their payments for healthcare costs. And unfortunately, you can't, even though it might be paid in the covered period, if you're accelerating healthcare costs for healthcare that's outside of the covered period, that's not going to be allowable as a forgivable cost. So it has to be inside the covered period, has to be incurred and paid inside that covered period.
So this is the first curveball that these FAQs have thrown at us. So all along, we've been told forgivable payroll costs include all payroll costs paid or incurred during the covered period. And healthcare costs, group healthcare insurance costs, are included in the definition of payroll costs. For some reason, in these FAQs, they decided to slip this one sentence in there that says, forgiveness is not provided for expenses for group health benefits accelerated from periods outside the covered period. So that's pretty clear. You can't prepay your health insurance. There's another clause in there that says only the portion of the premiums paid by the borrower for coverage during the applicable covered period is included, which tells me that if you made a payment during the covered period for coverage that coverage that was effective before the covered period, that doesn't count either. It's only for coverage during the covered period. This might be unintentional. You clearly can't accelerate them. They've made that clear. But this statement tells me that you can't pay them for costs incurred before the period either, which is inconsistent with everything.
Yeah, exactly. Especially when you look at the payroll cost. I mean, just payroll. Because, I mean, if you look at just payroll, they're saying that we'll allow you to take payroll that might have been incurred before the covered period as long as it's paid in the covered period. So you look at this statement, this is completely different when you look at the healthcare.
Right. So our guidance on this is if you don't need it, don't use it. And at the end of the day, it might be a pain, but I don't think anybody's going to actually need it, which we're going to touch on here in a little bit.
Right.
But let's keep going.
Okay. All right. Let's keep moving along here. Retirement benefits. We are getting a couple questions on retirement benefits, so maybe we'll try to draw some of those questions out while we answer these questions here. So the way the FAQ came out is it said for retirement benefits, it's, again, only the employer portion is deductible as forgivable, not anything paid by the employee. Same thing, paid during the covered period or incurred during the covered period and paid immediately there within. And then forgiveness is not provided for retirement benefits accelerated outside of the covered period. So we got a couple questions here, Mark, that just came up that are related to this. What about making annual pension contributions the employer portion? Yes, as long as it's the employer portion and it's for a portion of contribution that would be related to those costs inside that covered period. Would you agree with that, Mark?
So in theory, yes. However, because they threw this clause in there that says retirement benefits accelerated from periods outside the covered period. Is this pension contribution for the entire year? Is that a big dollar amount for the entire year? And so the SBA would say, well, 10/12 or whatever of that pertains to time periods outside the covered period. So you don't get you don't get forgiveness for that. I don't know. I mean, if you just read the strict letter of what these FAQs are saying, I have a concern with that. So I would go back to if you don't need it, if there's any possible way you can do this without using those, do that. Because I really just feel like it's going to make your life a whole lot easier. So that's kind of what the mode we're in now is. Immediately after coming up to the end of the 8 weeks, everybody was scrambling to get all their documentation together, get their application filled out, to get this thing done and off their books. Everybody wants it off their books, which is, of course you do. I mean, you want to get it forgiven, you want to put this behind you and move on. But if there is any possible question or concern that you are not going to get full forgiveness using the 8 weeks, just switch to the 24 weeks and just keep doing your payroll. Just keep paying your payroll. Get that payroll number to put on the application as high as you can possibly get it, and you're fine. You're not going to get the forgiveness application in and off your books as soon as you want it, but I really feel like it's going to make your life a lot easier. The documentation that you're going to be required to provide is going to be a lot less. You're not going to be sending them copies of leases, copies of mortgages, copies of amortization schedules, all this other stuff. All you got to do is justify your payroll, which is relatively easy to justify. So we got another question that said, if you only need 12 weeks of payroll to get full forgiveness, can you just use 12 weeks payroll, get your number up there, cut it off and apply? Yes, you can do that. Another question said, if you have a reduction in your forgiveness amount because you don't pass the salary or FTE tests, can you get your payroll number so high that it's 120% of your loan amount, and then you have 10% reduction in your forgiveness? You multiply your 10% times your payroll costs, deduct that from your payroll costs. Your payroll costs are still higher than your loan amount, and you're fine because it reverts. The loan forgiveness, if you just follow the math on the application, the loan forgiveness amount just says enter the smallest of lines 8, 9, or 10. And as long as the smallest number on there is your loan amount, you're good.
Yeah, Mark, exactly. That's exactly what we're trying to say at the very start. Because if you look at the very front page of the calculation, it says payroll and non-payroll costs. You add up your payroll costs. You add up your mortgage interest, your rent and leases, your utility payments. You get all that added up, and then you're going to have any types of total salary or wage reductions that you might have had calculated in there. And if you had any FTE quotation reductions, they give you what this is called a modified total. Well, let's just say that you get to, you do have some FTE reductions, or you do have some salary and modified reductions, and you want to try to apply for forgiveness after 12 weeks. Why put yourself in a spot where you owe something back? Why not just say, I want to use the full 24 weeks and pick up all the payroll costs for the full 24 weeks that I actually paid? Because there's nothing in the application that says it's only on the amount that you used from the loan. It says all payroll costs for 24 weeks. So you would just pick up all 24 weeks payroll costs, right, Mark? The application is pretty clear cut in regards to how you do it.
Yeah, it absolutely is. And the other thing I've been hearing is, well, my bank wants me to get this loan off of my books so I can meet the covenants. Well, I mean, if the bank doesn't understand this, I don't know what in the world they're doing. Would the bank rather you have to pay some money back or get full forgiveness? Which just so you can meet the covenant. If they're not going to give you a waiver on their covenants, you tell them to call me and I'll talk to them about it.
Oh boy. All right. So again, retirement benefits, only employer portion, paid during the covered period, incurred during the covered period, paid immediately after, and forgiveness is not provided for retirement benefits accelerated from periods outside the covered period.
Yeah.
All right. Moving on. Now, here's where here's
curveball number 2.
Yeah, here's curveball number 2. So, when we looked at when we had these webinars in the past, Mark, pretty much everything that we've talked about so far, within most part, is pretty consistent with what we've been saying. There are some things here though that were a little bit of a curve from the FAQ versus what was published by them in the past. So, first item, owner's compensation. That is really the biggest item here. So there's multiple ways that you can look at owner's compensation, depending on what type of structure of business you are. Could be an owner employee at a C corporation, an S corporation. Could be anything in regards to general partners. It could be just a cash compensation. It could be a number of different things. Remember, the general rule here though is that cash amounts are capped. So if it is an 8-week period and you're an owner, you're capped at $15,385. If it's a 24-week period, you're capped at $20,833. Now, the reason why everybody's probably saying, why is it $20,833 after 24 weeks? Why isn't it some number that's much higher than that? The reason why is because when you went and got the loan, and you used owner compensation, it was based on 2.5 months. And they don't want to give, the SBA is pretty clear in regards to the fact of they are not looking to give some significant benefit to an owner by allowing them to apply more than 2.5 months of 2.5 months of cash compensation that from their 2019 filings to payroll for 2020. They want that cap because really at the end of the day, the money is meant to be used for the employees, not for the employer. And there's a number of different things that could go on there, Mark, that, had they not put this rule in place, could have put a situation where owners could have taken a lot more money out for themselves and their payroll.
Yeah, I mean, I would never suggest that anyone would do this, but I could see an owner somewhere saying, getting the loan and then saying, well, I couldn't open. And, and maybe you couldn't, I couldn't open. So you just kept paying yourself for the entire 24 weeks and you get full loan forgiveness and you just got a giant handout for the government. Meanwhile, all your employees are on unemployment. The idea was to find your employees, even if they're not working, and just pay them to keep them off of unemployment. So they had to put this in there. It makes sense.
Yeah. So let's talk quickly then about C corporations. So if you're a C corporation and you're an owner employee, you are capped at the 2.5. You're capped at your 2019 cash compensation using the 2.5 times rule divided by 12. Now, the one thing though is additional non-cash compensation, Mark, things like health insurance, anything that's employer paid, like some state and local taxes that the employer pays for the employee, or retirement benefits do not count towards the caps of $15,385 or $20,833. So that is something that seems to be a little bit different than what we've seen here from some other previous.
You're being very generous, Dave. This is a complete 180 from everything we've been told for the past 4 months.
Yeah, exactly.
Which is, it's fine. It's a good answer. I don't think it's
a good answer. Yeah, Mark, you're 100% right. It's a good answer, no doubt, for those that are applying for loan forgiveness, because now this non-cash compensation gets to be picked up. So you got it, And then retirement contributions are capped at the 2.5 times. 2.5 times cost for retirement contributions for those that are C corporation owner employees. All right, so moving on, let's talk about S corporations, because S corporations are a little bit different from the perspective of the fact that unlike the C corporations where you can pick up some of the healthcare costs here, on the S corporation, if you're a greater than 2% shareholder, that healthcare cost is not picked up. And the thinking there is that it's not picked up because it's already part of your cash compensation to begin with.
Right.
Right, Mark?
Yeah. This is a function of just tax law as it relates to S corporation owner employees versus C corporation owner employees. If you're a greater than 2% shareholder in an S corporation, you're not eligible to get for fringe benefits. So any health insurance that's paid by the company has to be included in your gross compensation on your W-2, and then you get a deduction for it on your 1040. So just what they're saying is your W-2 amount should be higher. And it's already included in there, but then we revert back to the 2.5 months or 2.5 divided by 12 of 2019 comp, or the 15,385 or 20 grand number. So if you're an S corp and you're greater than 2% shareholder, you do get dinged a little bit on this. Again, no reason why you still shouldn't get full forgiveness. It's more just a nuance of how you report stuff and how you get to your total number.
Yeah, and just like you said for the start there, Mark, it's really a function of tax more than anything. The reason why they separate this out for S corporation employee owners versus C corporation. All right, moving on here. Let's talk about if you're self-employed and you file a Schedule C or you file a Schedule F. Again, you're limited to the calculation of 2.5 times 2019 profit divided by 12, or if you don't have a Schedule C for 2019, it would be whatever your estimated 2020 profit's going to be.
And this goes back to what was used to apply for the loan amount too.
Yeah, exactly. Additional non-cash compensation not eligible. So basically, bottom line is, if you're Schedule C, you're pretty much limited to whatever the bottom income was on your Schedule C. So, general partners. This is one that Mark and I had a little bit of conversation today about if you're a general partner and also have guaranteed payments in there as well. So if you're a general partner in a partnership, again, the calculation is the same as almost everything else. You're limited to 2.5 times or 2.5 months divided by 12 of the 2019 earnings for self-employment that is subject to self-employment tax. Additional non-cash compensation not eligible, and payments must be made during the covered period. So again, one of the things that Mark and I were talking about earlier today was in a previous interim final rule that was issued, they were very specific about guaranteed payments, and that guaranteed payments were allowable payroll deductions. If you look at your K-1, your guaranteed payments are running through your K-1, and the way that this FAQ is written is it says that you pick up from your K-1 box 14A. So box 14A should be all of your ordinary income plus any guaranteed payments that you would have had. So this is pretty consistent with what your K-1 would look like and what the income coming off that K-1 is going to generate. All right. Anything else there, Mark, you want to add?
No, that was Box 14A should be both your guaranteed payments and your ordinary income, so it picks up both pieces. So even if you have no guaranteed payments and you ran it all through distributions, the cash coming out through distributions for purposes of 199A, and put it all through ordinary income, you still should be fine.
Yeah, there's a question here, Mark, that came in. It says, does the compensation include owner's distributions versus owner wages?
So that's I feel like they're trying to trick me here, because if you're getting distributions that are not dividends, I guess I'm thinking in the context of a partnership, you can't get distributions and compensation. Compensation meaning W-2 compensation. You have to get guaranteed payments or ordinary income. So your distribution, if you have no ordinary income and you have no guaranteed payments, and you just have distributions because whatever, you have cash left over from prior years, there'd be nothing in box 14A, so you might have a problem there. But assuming you have ordinary income and guaranteed payments, you should be fine regardless of what's in the distribution box.
Yeah, one of the other questions just came in too is said, for LLCs, is there a cap in what could be allocated to salaries? Well, LLCs would fall under one of these owner compensation rules, because if you're an LLC, you're pretty much looked at as an owner, I would say, correct?
Yeah, yeah, the LLC stuff, they did throw that in here. It says because LLCs can be taxed as anything, you would look back to say, how are you being taxed? If you're an LLC member manager, you're gonna and you're filing as a partnership, then you're gonna fall under the general partner. If you're an LLC that's elected to be taxed as an S corporation or a C corporation, you're gonna follow the S corp or C corp rules.
Exactly. All right. Moving on here. Let's keep things moving here. All right, here we go. This is a Mark Heath question. So anybody who knows Mark, you know, Mark was a star soccer athlete at Messiah College. He was a stud player. In fact, I got to tell you a quick story to everybody out there. When my son played high school soccer at Central Dauphin High School, his coach was the same coach that Mark had in high school, and then he said that when he coached Mark in high school at Hershey, that Mark was just an awesome player. Was an awesome player. He was deadly up top, is what he said. So Mark being the soccer guy, deadly striker. Question is, who won the English Premier League in 2019-20? The Hershey Impact, the Harrisburg Islanders. That's not the Harrisburg, New York Islanders. It's the Harrisburg City Islanders. The Philadelphia Fury, or Liverpool. So
now,
we're going to give everybody about 45 seconds to answer this question. And keep in mind, you need to answer the question to get full credit for your CPEs on this webinar today.
That's right. Polling question. And if you don't get this one right, I'm begging you to get this one right. I'm a huge Liverpool fan, if that's a clue for anyone. And 3 of the teams on this list don't even exist anymore. So,
so you just basically gave the answer away, Mark. You gave the answer away.
Fortunately, you don't have to actually get it right to get CPE credit.
All right, 5
seconds.
Four,
get your answer in.
3, 2, 1. All right, let's take a look. All right, so Liverpool. Yeah, Mark, you got it. Yeah, that's pretty good. That's 79%. Although I gotta say, Mark gave everybody the answer, and 21% of them got it wrong.
That's true.
All right. Anyways, let's go on to non-payroll cost here. A lot of what we're going to talk about in the non-payroll cost area, again, is pretty consistent with what we've talked about in the past. Again, this is just a re-clarification that came out from the SBA and their FAQ. Paid and incurred confirmation. Again, anything that's paid prior to and paid during, or incurred prior to and paid during the period. So you could have a you could have an electric bill that came in from the prior period that came in that is on a normal cycle, Mark, and you're paying it within the current period. That would be picked up as allowable cost. Incurred during and paid after, meaning that you could have incurred it. It could be an electric bill that you get the electric bill on September 1st. Charges are for the period of July 15th to August 15th. And if that July 15th to August 15th period's inside your covered period, it's allowable and you can pay it, or you can pick it up even if it was paid outside the period. Alternative covered period confirmation not applicable. The reason why is because the alternative covered period is only for payroll cost. It doesn't apply to non-payroll costs. It is only for calculation of payroll cost. So just to reiterate, alternative covered period only for calculating payroll cost. All right, interest on unsecured credit. Unsecured, let's make sure that we emphasize the word unsecured. Unsecured meaning that it's not backed by some type of personal property, some type of physical property, like an auto loan maybe, a piece of property, a mortgage. If it's unsecured credit, it is not eligible. It has to be secured credit. It must be secured by real or personal property. Now, part of real or personal property, one thing that they gave us the luxury of clarifying in the FAQ is they use the specific example of personal property being such as an auto loan. So I know a lot of people were bringing that up as to, can auto payments be included as part of my secured credit and part of my mortgage interest? Yes. Now they've made that very clear that you can include that. All right, moving on. Renewed leases and refinanced mortgages. Good question here. So there was some questions before about February 15th, I had a mortgage on a property, and then I went and refinanced that mortgage because interest rates were tremendous. They're really great. I was able to get point and a half reduction on my interest rates, and I refinanced my mortgage April 30th, knowing that that was a new mortgage versus what I had at February 15th, the tracking period. Can I pick that up? The answer is yes, you can. If you had to renew a lease on a piece of equipment, as long as the lease was in place before, and this is just a renewal of that lease, yes, you can pick up the interest on that lease. So that kind of clarifies those issues, Mark, around leases and refinanced mortgages and things of that nature. Covered utility payments. Payment for a service for the distribution of transportation. So this is another question, Mark, that we had, that we talked about before, was in your electric bill, for instance. We'll use that as the example. In your electric bill, there's all kinds of other charges outside just electric. There's the electric transmission. There's the cost for administrative costs from the electric company. The FAQ that came out here was very clear. It said it is the whole cost of your bill. So the bill could include the transportation cost of getting you the electric charge itself, and any other costs that are incurred by the electric company. So it is the full cost of the bill. So yes, utility fees assessed by state and local governments that are in your bill, they're part of what is a forgivable cost from that bill.
Yeah, and sorry, go ahead.
No, and I was just going to end it by saying electric supply charges versus electric distribution charges, both eligible.
Yeah, and this, I was hoping they were going to address the transportation thing, because that's still something that we don't have full clarity on it, and we're getting the questions now. Is diesel fuel for delivery trucks eligible as a non-payroll cost? There's one line in one of the IFRs that says you can use fuel for a fleet of vehicles, business vehicles.
Yes.
The problem with that IFR is it's only in the context of a self-employed individual, and so it's a risk to apply that to any other situation. Even though it says it in there, you're taking a risk if you apply it to something else, which gets us back to, if you have any questions, if there's any concern about any of this, go to the 24-week period, just run out your payroll and get full forgiveness. We got another question that says, so are you telling me if my payroll costs get me full forgiveness, I don't have to include rent, interest, and all the other stuff? Correct. If your payroll costs get you full forgiveness, don't worry about it. Keep the documentation, keep a hold of it, so in case there's some unforeseen problem and the bank says, rejects your application for whatever reason, you have time to contest to appeal their finding. If you have to pull the other stuff in, fine. But I just don't see many scenarios where, as long as you just run out your payroll, get your payroll cost number way above your loan amount over the 24-week period, you should be fine.
You're 100% right, Mark. I mean, keep in mind, the whole intent of the whole program was to provide money to businesses and organizations to cover payroll and salary costs to keep people employed. That's really the long and short of it. So if you can use it for payroll, that's what you should use it for. If that's what's going to get you full loan forgiveness, I would go that route. All right, let's keep moving along here. Okay, last polling question. Everybody paying attention. Polling question. This is a good one, Mark. And Mark, you came up with this question. So, and I'm a history guy, so I really liked how you came up with this question. But which Pennsylvania cities have served as the capital of the United States? Lancaster, Philadelphia, York, or all of the above? Now, I know a lot of people are going to think immediately Philadelphia, Mark, but that was only one of the capitals. So that might have just gave the answer away if that was only one of the capitals in Pennsylvania.
So, well, in rereading now, the way I phrased the question, just the way I phrased the question kind of gives it away.
Yeah, because you used plural cities.
Yeah, I wasn't going to make it quite that clear for everybody. Because, well, interestingly enough, though, I didn't, I thought Philadelphia might have been. I knew Lancaster was, so that's what made me think of this question. And so I obviously made sure to put Lancaster in there. But then in my research, I saw that both Philadelphia and York were in there, all as a result of, it might have been Revolutionary and/or Civil Wars. I forget if it was one.
Yeah,
or both.
It was the War of 1812.
Okay.
War of 1812. They had to move to, I believe it was York, Pennsylvania, because of the English when they burned down the Washington D.C.
Okay.
So all of the above. All right, we got it. We got that
Winner.
We got a winner. All right, let's move on here because we're running out of time here, Mark. I know you got a hard cut off at 3. I just want to let everybody know as we finish up these last couple questions that as you send your chat questions in, Mark and I will do what we've done in the past. We will review all the questions, issue our own FAQ on your questions early next week, and get that out to everybody so that it will help you with your applications, okay? Let's talk about rehire offer confirmations. So again, they wanted to make sure that everybody was crystal clear on the confirmation and documentation requirements of the rehire offer confirmation. So if you have a situation where you laid people off, you're going to bring people back, and you have a situation where people don't want to come back because of their concern around the coronavirus, it is a reduction to your FTE that you can take. But you need to make sure you have the proper documentation around that. So you have to document that you've offered the job, and the confirmation that they refuse to accept the job back. So as long as you have that documentation in place, that you could take that FTE adjustment. One of the bigger questions here that Mark and I have been dealing with lately is around seasonal employers. More seasonal employers out there, Mark, than I anticipated that we were going to see, right?
Yeah,
but you
definitely.
know, the way the rules are written is that you take 12-week period between, you can take a consistent 12-week period between May 1st to September 15th to figure out what your FTE count is. The question is, when you go for loan forgiveness, you have to use that same period. You can't be moving around different periods within that time period. If you use the certain 12-week period between May 1st and September 15th to get your loan, you have to use that same period as your forgiveness calculation for FTEs. And then the last thing here, confirmation on salary wage reduction test based on salaries and wages only. So again, they confirmed that when you're doing the salary and wage reduction test, you're not picking up anything else other than cash compensation on salaries and wages only. Nothing that has to deal with healthcare benefits or retirement benefits, state and local taxes paid on your behalf. It has to be compensation paid for salaries and wages only when you're looking at the salaries and wage reduction test. All right. Mark, I think we covered it. I think we covered everything in the FAQ. The only final item that we don't have in here, Mark, real quick on the FAQ is they did come out this morning or late last night with some additional items on the FAQ that are surrounding the economic injury disaster loan. And basically all they confirm there is that if you received an advance on the economic injury disaster loan of $10,000, that will be applied against your forgiveness amount. So it would reduce your forgiveness by whatever was advanced to you. That's ultimately just re-clarifying that from the SBA, that the SBA will, once they receive the application from the bank, that they will reduce your loan amount or your forgiveness amount by the $10,000. So it's just everybody needs to keep that in mind, that if you did get an advance, that will go against your loan forgiveness for your PPP. That's it, Mark. I think we covered it. I think we got a few minutes if you think it's appropriate to go through some additional questions here.
Yeah, we got the questions over here. Let's quick run down through these and touch on ones we haven't covered.
Okay.
Has the SBA provided a definition of transportation yet? Unfortunately not. I guess I did touch on that a couple minutes ago, where all they talk about in terms of transportation out of that one line in the IFR is transportation as it relates to delivering of electricity on your electricity bill.
Has there been any current updates if there will be automatic loan forgiveness? No, there hasn't, and I don't know if that's actually going to happen. I mean, if it does happen, it's going to have to be agreed to by Congress and one of either the HEROES Act or one of these other acts that they're trying to pass. But at this point in time, there does not look like there's any automatic loan forgiveness out there that to be had at this point.
Yeah, I think maybe what they were getting out there was the automatic review. Anything over 2 million, they're saying is going to be automatically reviewed. Anything under 2 million, you're going to be automatically deemed to have had cause to get the loan. Doesn't mean that you're going to get automatic forgiveness. If you fired someone for just cause, isn't that an exemption? Yes, it is an exemption. Remember, just document the cause. Are
owners' salaries included in the payroll forgiveness? Yes, as we talked about earlier, it depends on how that looks. If it's an SC corporation, whatever it might be, but yes, it would be picked up.
Yep, subject to those caps. If we weren't able to utilize the full loan in the 8 weeks, but we will utilize the loan inside the 24 weeks, what happens if we have to lay someone off? Do we have to wait until after the 24 weeks? No, there's actually a really good Forbes article out there. If you go on Forbes' website, check out the PPP stuff. It came out the end of June, right after the June 22nd IFR was released. They see no reason, and I agree with them, they see no reason that if you've used all your funds, you apply for forgiveness, once you kind of used everything and you've met all the tests, you're not going to be held to keeping someone on the entire 24 weeks, because most likely you can't. And then that goes back to all the exceptions that they've allowed for the FTE tests.
All right. Please clarify if you use in 15 weeks 110% of your loan in payroll costs, we could have 10% reduction resulting from FTE reduction and still get 100% of the loan forgiven.
Yeah. Assuming,
I was going to say, I don't see any reason why you can, right?
Yeah, I mean, technically, I think the math is off a little bit there, because if you have a 10% reduction, that would reduce you below the whatever. But yeah, you should be. The point being, if your payroll costs are higher than your loan amount, and your net forgivable payroll cost because of any reduction is still higher than your loan amount, you're good.
Is there a clarification on the payroll expenses that are able to be forgiven? I think we just covered all that on the payroll expenses. Can I use my ADP reports for the accurate payroll expense? Yes, I would highly suggest that you, if you use ADP or Paytime or Paychecks or any of these larger payroll providers, they can provide you with that detail. And the banks and the SBA have already said that detail from those organizations is acceptable. So I would say do that. We talked about owners' benefits already, Mark. I don't think we need to cover that again.
Pension and profit sharing. There's one question here. How about the profit sharing that's paid at the end of the year? If that's being paid outside of the covered period, no, I don't see how that would count. Maybe you get, if you only ever make one payment, you could make the argument that is the first regular payment after the covered period. But based on the most recent FAQs, I would say you're running a risk of having some of that disallowed to the extent that it represents profit sharing payments from outside the covered period that weren't incurred during the ratable amount that would have been incurred during the covered period.
If we needed a few extra weeks, say 10 weeks rather than 8, to spend all the proceeds, that we have to wait for the entire 24 weeks to apply? No, you don't need to. You can apply anytime during that covered period. That's outlined pretty specifically inside some of these interim final rules. Well, all we're saying is we would highly suggest, depending on whatever happens with your FTE counts or if you had any types of salary reductions, that you do the calculations to see what makes the most sense, whether to wait to the end of the full 24 weeks to pick up all that payroll cost, or if you think that you meet some of these exceptions for FTEs, go ahead and apply inside the covered period and get it taken care of at that time. I think it's a matter of doing the math what it comes down to at the end of the day.
If the loan origination date was April 20th, payroll period started April 16th, you can prorate the calculation. Actually, you should be able to get all of that, because everything that was incurred between April 16th and April 20th and paid after April 20th during the covered period would be deemed to be paid during the covered period, so you can include that. The only time you should have to prorate anything is for that first payment after the end of your covered period that represents payroll costs incurred after the covered period ended.
Right. Well, Mark, I think we're at 3 o'clock and we covered a good bit. So like I said before, Mark and I will go through these questions and we'll try to address all these questions as quickly and as best as we can and get that out as a additional FAQ for everybody. So you can go about your business of getting your application done and get it to your bank. Just as a aside here, if there's any way we can help with any of your calculations, feel free to contact Mark and I. There's our contact information. Feel free to contact us at any time. We get a lot of emails from a lot of people throughout the country. Actually, Mark, I would say we've gotten emails from people across the country in California, Washington, Oregon that are listening to these webinars. So anybody who has questions, feel free to reach out to Mark or I. Will be more than happy to try to answer your questions as best we can and help you through this process. That's about it, Mark. I don't think there's anything else to cover at this point in time.
That's all I got. If the SBA throws some more information at us, we'll be sure to have another webinar. So stay tuned.
Yeah. For Mark and myself, we just want to say thank you for attending the webinar, and we will get back to you shortly with questions or answers to your questions. And thank you very much for your time today.